This is going to be by far my most truthful and my most helpful video on YouTube since I started this channel, because I believe most of us as investors, we go through the same process, through the same phase. Maybe we start as value investors or Warren Buffett investors, and maybe we go into growth investing, we lose some money, or we invest in dividends, we have the first market crash, market pullback, we sell at the bottom, then the stock goes up, we make some mistakes. We all go pretty much through the same exact process. And I believe this video will help you not only save a lot of money in this market pullback, especially if you're a newer investor, but also will help you make a lot of money by on actually focusing on the things that matter. And it's not much just about buying the dip and closing your eyes or whatever. It's much deeper than that. I'm going to talk about a lot of different points, and I'm confident you're going to enjoy it. It's not going to get a lot of attention, not as much as other things I do here on YouTube. So all I ask, if you could please press the like button if you enjoy it, and leave a comment. Let me know what you think. If you agree with me, if you disagree with me, let me know what you think. This market pullback has been, happening very quickly, and you're not alone. My portfolio is also going down. My portfolio has been doing very well before that because I was positioned into the safety stocks, but even my portfolio, my small caps are also starting to come down. I am down around 4% on the week. I was up as much as 50% year to date, and now I'm up around 40% year to date, and things are starting to go down. So you're not really alone in this pullback. I think most of us are experiencing this kind of pullback. I'm going to tell you what I'm doing in the market. I'm going to tell you what I think about this whole thing in general. Okay, now this is very important. It's something I posted on Twitter. And again, when I say that most of us go through the same journey, I believe a lot of you are going through this phase right now or about to go through this phase. And I said in a market pullback, many investors will turn macro investors and start looking for a reason to be bullish, for them to buy the dip. Guess what? This reason never comes because stocks bottom on bad news like they did in 2022. Fundamentals is the only way to do it. It might sound very simple, but it's much deeper. I'm going to explain it. And this is what normally happens when the market goes down, especially if it goes down this quickly, this fast, with a lot of stocks, especially Amazon and others. Many investors will start panicking and they won't buy the dip because they believe the market will go lower. So they start looking for some kind of indicators that would tell them when they should be bullish on the market or when they should be buying stocks. And maybe you start looking at charts by a lot of maybe macro analysts, macro investors, maybe a lot of, just people that are bearish in general. You might start looking at charts, and this is a very scary chart that would tell you that this dip shouldn't be bought. You shouldn't be buying this dip because we broke below the trend line and we're going much, much lower. But conversely, you could look at another chart, which is actually my chart, but it's to highlight a point. This is the 21 on the weekly, the moving average. And you could see how well it has held up on the S&P from it. We had 3 red candles, and then we bottomed on it. Now we have 3 red candles. Maybe we're bottoming on it too. Maybe we could break down and go much, much lower. But this is exactly what happened in April. And I can interpret this chart as a bullish chart that we're potentially bottoming out. But I can also interpret this chart as a bearish chart and we're going much, much lower. So the truth is that charts aren't really going to help you to tell you when you should be buying the stock market or when you should be buying a crash or when is the time to be bullish. Charts aren't going to help you. The second thing a lot of people will start looking for is a lot of macro indicators. And this is the biggest trap that I fell for many times before, especially my first time when I was going into a market pullback. I started looking at the macro indicators and I got a few things right. And then my ego went through the roof and I saw that now that makes sense. I could look at macro stuff and then I can predict exactly what the market will do, which means I can potentially know when to buy the bottom. And this is one of the biggest and most costly mistake I have ever made. And I hope you don't repeat it. But you might start looking at a lot of macro indicators, for example, unemployment. Okay, so this is a very basic example that unemployment is going up. And if unemployment keeps going up, that means we could potentially have a recession. And if we could potentially have a recession, it means that a lot of companies will report bad earnings, which means the stock market will go much, much lower. This makes a lot of sense, right? But conversely, you could also think about it as if unemployment is going up and the economy is getting weaker, maybe this is bullish for the market because the market cares about lower interest rates, and that could cause the S&P to go much, much higher. This is the same data data. But the truth is, we don't really know how is it going to be interpreted. Is it going to be a bullish signal that the economy is getting weaker, which means lower interest rates, and that's good for the market? Or is it maybe because we're going to have a recession, which is bad for earnings? We don't really know. We don't know how the market is going to interpret it. So charts are useless if you're trying to buy a stock market pullback, and economic indicators and the macro stuff, they're also useless if you're trying to time the market or trying to find a reason to be bullish. This is a big mistake, and both of those things don't actually work. And even Howard Marks talked about it in this podcast, which you could listen to. I listened to it; it's my favorite one. But the illusion of knowledge, it says that you might believe that if you look at macro indicators, you could tell what's going to happen. But the truth is, no one really knows, because you don't know how the market's going to interpret this data. It could be bullish, but it could also be bearish, and no one really knows. So why do I do a lot of that stuff, a lot of the videos, market crash, many different things? A lot of you tell me you hate them. You love my analysis, but you hate when I do those videos. So why am I doing them? Well, I don't do them to try to time the market. I'm never 100% out. I'm never going all in put options, shorting. I never sell a stock because I believe it's going to go lower. I never not buy a stock because I think the market's going to crash. But it helps me have a view. And this view helps me create one-way bets. That's what I focus on. And this is what I talked about, the rotation. I talked about stocks like Pepsi, McDonald's, and NOC. I said, if we're going to have a rotation out of big tech, money has to go into something else on recession fears and all that kind of stuff. It's going to go into the safety stocks, dividend stocks, and REITs. This is why ADC is up, realty income, a lot of the stuff we talked about. But Pepsi is up 8% on the week. McDonald's, which I own, is up 11.5% on the week in this market pullback. And NOC is up 13% on the week. And these stocks, they helped me a lot. So my thesis was that if my thesis was right, if my view was right on the market based off those videos, then I could make a lot of money while the market's going down. But if my view was wrong, I still believe McDonald's is undervalued. So I'm going to hold it either way. So if I'm wrong, I don't lose money. And if I'm right, I'm going to make money. This is the kind of stuff I focus on. I don't go all in put options or anything crazy. And that's why I like to have a view and look at certain things. But the last one, which is the most important one, is trying to look for a reason to be bullish. This is something I heard in 2018, I heard it in 2020, and I heard it in 2022. And the truth is, a lot of people will start looking for a reason to be bullish. For example, they want a good economic data, expansion in the economy, good economic indicators, good earnings. They want good stuff for them to be bullish on the market, for them to be buying the dip, because this is how they believe the market bottoms. It bottoms on good news. And this is a classic example of a very recent one, actually, which is McDonald's. This is a stock I talked about. McDonald's reports its first global drop in sales since 2020. 26,000 likes. Massive, massive attention around it because it was so bad since 2020. This is the first drop, global drop since 2020 for McDonald's. And the earnings weren't the best at all. Now, what happened to McDonald's stock? McDonald's stock, since then, on the 29th, from the 29th till now, McDonald's is up 9%. It's up 9% since it reported its first global drop sales since 2020. Why? Because stocks don't bottom on good news. Stocks bottom when bad news couldn't get any worse. When March 2020 we were locked down, before the economy reopened, stocks started to go up because the economy was closed, oil went negative, all the bad stuff happened. It just couldn't get worse. This is when stocks actually bottom. This is how Tesla bottomed so far. It's up 46% since it had one of its worst quarters. It had a very bad quarter, and because it was expected, it was going down in it. This is when Tesla bottomed, and this is how Tesla went up, even up to 85%. Now it's still up 46%. So Tesla also did bottom on bad earnings. And it's the same thing for stocks. So if you're looking for a reason to be bullish on the market, a reason to buy the dip, some kind of a chart, some kind of macro indicators, you're doing it wrong, and you're going to miss out on amazing buying opportunities in this market crash, because stocks don't bottom on good news. Stocks bottom when bad news couldn't get any worse. And this is just how it is, and I showed you a lot of things that prove it. Now, this is what I believe people should do, and this is what I'm personally doing, and this is what I believe in, is that the best time to buy is when it's not easy to buy. The worst time to buy is when it's easy to buy. The worst time to buy when it's easy to buy was like in 2021. People were excited about Tesla and a lot of the stocks, and it was easy to buy. Everyone was buying, your friends were buying, your neighbors were buying. So you felt that everyone else was buying, so everyone can't be wrong. But I have the opposite view, which is everyone can't be right, and that's what I believe in. But if everyone is buying, and if it's easy to buy, you buy the stock, it goes up, you buy the stock, it goes up, you feel like a genius. This is the worst time to be buying. So the best time to be buying was in March 2020 when I was buying Darden restaurants at $50 and $45, and people were locked down, but it was cheap. When I was buying Carnival Cruise Line, when I was buying ExxonMobil, Royal Dutch Shell, when oil went negative on paper. And this is the best time was to be buying stocks. The best time to be buying stocks was in 2022. The best time to be buying stocks was in 2018 when Apple went to 13 times earnings. And the best time to buy is when it's not easy to buy, when you want to buy stocks and you believe we could go lower. You're doubting yourself. You're looking at your stocks, they're going down. You're feeling frustrated. You're feeling like it's never going to end. This is normally the best time to be buying stocks because most people aren't actually buying. They're waiting for a reason to be bullish, for a bullish chart, a bullish macro indicator, and that stuff is never going to come. So the worst thing you could do is try to time the market by finding ways to capitalize on the market in the short term, buying put options, selling stocks because they believe they're going lower, shorting the stock, doing the stock. This is what I did in 2022, and it was a big mistake. And this is not what I should have been doing. And I think if you're doing this right now because you're worried about the year-to-date performance in the short term, you're doing it wrong. And I believe the best thing you should be doing, and this is what investors like Stanley Druckenmiller were doing in 2022. He was looking for secular trends for stocks or industries that could boom in the next 10, 15, 20 years in game changer kind of industries because people forgot about them. And as the market is going down, people forget about that stuff. They forget about the trends. They forgot about AI in 2022. This is when Druckenmiller bought stocks like Nvidia and many of the big tech stocks when people were hating on them. And this is how he bought Nvidia. And Nvidia been amazing performance for him. And this is what I should have done in 2022, but I was blinded by trying to short stocks and do different things so I could make money while the market was going down. This is a big mistake. And I believe right now, and this is what I'm personally doing, I'm trying to look for long-term trends that investors forgot about. Why? Because they believe a recession is on the horizon. I mean, it's stupid. I mean, can you just think about it? It's stupid, guys. Like you have these stocks with such long-term potential, amazing industry like the infrastructure spending in the United States and Canada. This is a booming industry. And a lot of those stocks right now are going down despite having record backlogs. Why? Because the market is going down and we're going to have a recession. You have a lot of the AI stuff that's starting to get interesting. Why? Because the market is going down, we might have a recession. You have, if you believe, just as an example, data centers. If you believe that global data centers is going to increase with AI and a lot of that stuff, investment stuff, now all data centers globally, they consume more electricity than countries. And if you want to keep expanding data center innovation and many different things, you need to increase your energy supply. And there's many ways to do it. A lot of them are being powered through natural gas, which I do have a natural gas investment. But the second one is a lot in nuclear energy kind of stocks, like Constellation Energy. This is a stock that was loved. It's down 19% on the month, and I hope it goes lower because I'm researching it. This is what I'm looking at. This is a 10, 20, 30-year kind of trend with massive potential on these stocks, but people are forgetting about them. Why? Because we're going to have a recession. This is the things you have to be looking for. You have to be looking for the next thing and invest in it right now while investors are distracted, while no one is looking beyond the recession. Everyone is focused on what's going to happen in the next 6 months. You have to be focused on what's going to happen in the next 5 to 10 years and invest in those areas where people aren't thinking about them. And this is what I missed before. I done it sometimes, like in 2020, I did buy a lot of the plant-based stocks. One of them was Else Nutrition, which was Baby F, and it went up 400%, and I made money on it. And then it didn't do too well, but I sold it down 400%. And I did do a few of those things before, looking for the next thing while people weren't doing that stuff in 2020 and, capitalize on it. But that's what kind of stuff I'm looking for and I'm researching. I share more of that stuff in my own group if you're interested. But for me personally, I still believe this is not a major crash. This is mainly a small pullback, and it's happening too quickly. The VIX almost hit 30, and this just happened too quickly, and I don't believe this is sustainable. But having said that, I hope I'm wrong, because stocks like Amazon and others are going down, and I'm getting excited. So this is all I have to say. It's not financial advice. I hope you found this stuff helpful. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.